It's hard to escape it and almost impossible to not be affected by it. Inflation, food prices, recession, the direction of the US dollar, war, food insecurity, even food shortages. And I want to talk to you guys about all of these topics today. The housing market and what we're likely to be facing going forward, and a food shortage that is expected to be hitting Americans as of next month. Now, there's several things going on right now. We've got the inflation rate for right here in the United States, CPI, as well as core inflation numbers hitting record highs and showing very little signs of slowing down, even in the wake of the Federal Reserve raising interest rates to the third 75 basis point rate hike in the last three sessions. Fed Chair Jerome Powell said that he is committed to continuing to raise interest rates for the American people, for the federal funds rate, which will affect credit cards, interest rates, any variable interest rates, American Express, Visa, MasterCard, any type of credit card that you have, even mortgages, especially mortgages. And we're seeing probably the biggest impact right now in the housing market. We're seeing a drastic decline in mortgage applications. We're seeing a drastic decline in mortgage home sales, or I should say real estate home sales. And one bank in particular, Bank of America, has decided to reach out and become more and more aggressive with their zero down payment assistance program, which is rather targeted. And many people are wondering why they've decided to go this route to attempt to offer mortgages with zero down payment to mainly first-time home buyers in Black and Latino neighborhoods. Now, there are a number of different speculations and reasons for why Bank of America has decided to do this now, especially when they could have done this all along. I mean, many banks are now going the direction that we've seen in the past with, as we should probably title them as subprime mortgages. I know a lot of you guys remember that if you've been around back in the 2008 housing crisis during the Great Recession of 2008. Subprime mortgages were running rampant, and we're seeing more and more banks getting desperate. Wells Fargo shutting down high-risk bank accounts, or bank accounts that Wells Fargo deemed to be high risk, and we're likely to see more and more of this going forward. Generally, overall, these banks are, let's just say, they're getting concerned. They're becoming more and more worried, and they're taking, let's just say, aggressive stances in terms of shoring up balance sheets. And in the wake of Fed Chair Jerome Powell raising interest rates and slowing real estate sales, banks are losing money as fewer and fewer people are taking out loans. Banks are not able to generate the revenues and profits that they used to because people aren't taking out loans and buying homes anymore, or at least not at the rate that they once were. So banks are becoming more aggressive with how they lend money to potential home buyers. And it's kind of scary the direction that we're going. Rocket Mortgage, Bank of America, I think I might have seen JP Morgan Chase. I'm trying to remember some of the other banks, but basically I'm seeing a number of different banks offering 0% or zero down payment loans, or very, very low down payment loans for would-be home buyers. But the problem is they're charging astronomical rates. Some of these banks are charging astronomical rates for the mortgages that they are providing because it's a much greater risk. It's a higher risk. There's mortgage insurance being tacked on there. In fact, the government, we're seeing a lot of U.S. government backing of these loans. Pretty much, rather than the home buyer making the down payment for some of these, as we could call them, subprime loans, we're seeing the government actually offer provide the down payment. And so the government is essentially footing the bill and covering the gap between the down payment that the home buyer can't make and what the bank is demanding. So, and now if we go back to Bank of America's plan to, if we go back to Bank of America's new no down payment program for Black and Latino neighborhoods, this program's loose qualifying standards, they remove some of the major barriers of home ownership, but they're creating a significantly greater risk of default for borrowers with very little safety net. And it's interesting that Bank of America would come in and offer something like this at the peak of housing market prices, and right at a time where banks are just about desperate for sales. They're desperate for new loans. Banks don't make money unless you borrow money. It's simple as that. And this is in the face of rising savings rate, rising interest rates on savings bank accounts. And the thing is these banks have to continuously become more and more competitive with other banks. So as the Federal Reserve is raising interest rates, they are also raising interest rates on savings banks and savings bank accounts. So banks are collecting money from account holders, and they're needing to reward the account holders to some extent with their measly savings interest rates. But those savings interest rates are rising. So that's kind of a good sign if you're, stockpiling cash and putting cash in your bank account. But at the same time, it's increasing the bank's overhead and their expenses because they're having to pay this out to bank account holders. Now, with declining mortgages going out and increasing savings interest rates, the banks are kind of in this death spiral where their expenses are increasing and their revenues are declining. And so many have speculated that these banks are doing whatever they can to generate revenues, and this may even include providing loans to subprime borrowers. And so this is where a lot of the zero down payment loans are coming from, and we could likely see more and more of this going forward. Now, the scary part is we kind of saw this back in 2008, if you guys remember, as interest rates began to shift upward. Many subprime borrowers who had interest-only loans or variable rate mortgages, they had no doc loans. Remember that? I don't know if you guys remember that. The no documentation on income verification. There was no doc on a number of different things. And those were the first loans to go bust. Those were the first homes to be foreclosed on. And we're not seeing that yet. But it looks like banks are getting desperate and they're heading down that path. Another thing I want to talk to you guys about briefly are the food insecurity situation. Now, we do know that President Biden recently indicated that we're no longer, quote unquote, we're no longer in a pandemic, and this actually upset quite a number of people because millions of people, if not maybe not millions of people, but hundreds of thousands of people per year are still dying from the C-19, we'll call it, right? But as the president is declaring that we're no longer in a pandemic, the question is, how much longer will pandemic-related food assistance be available? And, the president did warn us that there would be food shortages. He warned us of that earlier this year. And he's been quiet about food shortages, I would say, over the last several months. But the question is, what did he mean by that? Did he mean that, that there wouldn't be any food available? Did he mean that farmers would not be able to farm and generate profits and crops from their farms? I mean, we have dealt with drought, and this has forced farmers to make tough decisions, increase fertilizer prices and the like. But many are aware that after the public health emergency, also known as the PHE, once it expires as determined by the Department of Health and Human Services, the countdown will begin for the unwinding of multiple pandemic-related aid and financial benefits that were provided as a result of there being a public health emergency. So this is going to result in the beginning of the unwinding of Medicare's continuous enrollment policies and the policies that affect access to telehealth. So this is generally going to affect the older population, people who can't get out of the house. It's also going to affect though unwinding could also cause an estimated 15 million people to lose Medicare coverage. So, that's a huge factor, and that's a huge expense that most people who are benefiting from this they're saving tons of money every single month as a part of this particular program that is about to expire. But it doesn't end there. The health policy, the community is perhaps less aware that the expiration of this public health emergency will also unravel to a number of important pandemic relief policies for the Supplemental Nutrition Assistance Program, also known as SNAP. And this is like food stamps, which currently provides food benefits to about 41 million people in 21 million low-income households across the nation. And this could seriously harm the health of millions of vulnerable Americans, as well as damage the economic recovery. Now, we've already seen a number of different, mainly Republican states, pretty much decline on additional or extending the pandemic-related assistance for food, and the argument is that this is creating a disincentive to force Americans to want to go back to work because they're getting this stimulus money, so to speak. And I don't know if this is what Mitch McConnell was talking about when he was talking about how Americans are flush with cash still, and this is why they don't want to work. And so there was a significant amount of additional SNAP benefits boost, EBT benefits boost to Americans. Now, I mean, even if you are getting SNAP, an increased amount in SNAP benefits, and increased amount in EBT benefits, that just covers food. It doesn't cover bills. So I don't know how much of an effect that this is going to have on bringing more workers back to the workforce. And, is it going to really address the labor shortage? That remains to be seen. But on the flip side to it, Jerome Powell, as well as the Federal Reserve, or representing the Federal Reserve, has indicated that the labor market will be impacted by the decisions that they're making with raising interest rates. Jerome Powell himself said, hey, the unemployment rate is, I think he said it was like 3.7% during his meeting last week, during the Federal Reserve meeting last week. And he indicated that the labor market will soften, and that we will head closer toward 4.4 to 4.6% in the unemployment rate moving forward. So, and this is what they're doing. What the Federal Reserve is doing is basically making businesses, it's putting businesses, small businesses, Fortune 500 companies, medium-sized corporations and businesses, is putting them in a position where it is increasing the cost of labor. The Federal Reserve's increase in interest rates is making the cost to borrow money much more expensive, and it's reducing and narrowing the margin for profit for businesses. So as businesses react to this, the first thing that they generally will look to do is to cut costs. And one of the larger costs for businesses is employee overhead. So on the one hand, you've got the Federal Reserve boosting interest rates and literally targeting the housing market, trying to create a housing market crash. They're trying to crash the stock market, which they're effectively doing. And they're also, I don't know if they're intentionally or unintentionally negatively affecting the labor market, but they did indicate that the labor market will negatively be affected. So if you couple that with this pandemic health emergency assistance for food ending, Americans are going to be losing more money or more food assistance benefits going into October. And Americans will either starve or they'll be forced to have to work. But the scary part is as the unemployment number is estimated or predicted to rise, according to Fed Chair Jerome Powell, that will be right at the same time that these additional food assistance benefits will be unwinding. So this could potentially create this food shortage situation that President Biden warned us of earlier in the year. But, this is just my own speculation looking at some of these events that are unwinding. You guys let me know what you're seeing. But, the scary part is what's going to happen when people start getting scared and they realize, hey, we can't feed our families. If Americans aren't prepping and preparing for what's coming down the pipeline, the question is what are Americans going to be doing when they realize that, hey, that check didn't come? Hey, that EBT transaction didn't go through. SNAP benefits aren't what they used to be. And then if they can go out and work, and I don't know everyone's health situation or their local economic situation, if jobs are available, but if businesses are forced to start laying off at a faster clip just to survive, businesses are trying to survive, and there's no jobs out there, and SNAP benefits are being pulled back, EBT benefits are pulling back, food stamps are pulling back, families are getting hungry, pantries are getting empty, refrigerators are, they're not quite stocked like they used to be. What do you think that the American people are going to do in that situation? So, I just wanted to share this quick update with you. I wanted to let you know what I see happening and what could likely be coming down the pipeline, and hopefully you'll share this message with your friends and your family to let them know what's coming down the pipeline, because the president did confirm he did confirm that the quote-unquote pandemic is over. So is the pandemic over? But more importantly, whether it is or it isn't, if the pandemic health emergency is declared over, then these emergency allotments that bring the monthly SNAP benefits to the maximum allotment for households that really need it, this could be coming to an end. So let me know your thoughts. Let me know what your concerns are. I've been getting a lot more emails and messages about how to survive in a stock market recession. Your 401k balances are being reduced. IRA account balances are being reduced as a result of the 2022 stock market recession. How do you survive? So I'm going to talk more about that. I know a lot of you have concerns about that, how to position your portfolios and your investment accounts to be able to survive this. Obviously, none of this is investment advice, but I do want to talk about how do we prepare, how do we survive a stock market recession in 2022, going into 2023, and the implications of the worsening recession as well as the housing market. But let me know your thoughts. Tell your families to prepare. We can make it through this. And the bright side to this is, with every crisis, there's always massive opportunities. So let's survive this and let's thrive going forward. You guys be safe out there.